What is up, everyone, and welcome to Now Next Never, our show about what's happening now, what's happening next, or what may never happen in the world of investing, stocks, crypto, NFTs, and so much more. I'm Nicole Casperson, and hanging out with me, as always, are my co-hosts Delana Saparu and Zaid Admani. What is up, guys? It is spring. I'm feeling those spring vibes here in New York City. Zaid, what is on the docket today?
What's up, Nicole? What's up, Delano? And what's up to everybody watching? We got a lot of great stories to talk about today. I think I'm going to go off at the end of this show for a really awesome story. But let me tee it up first. We have Uber. Uber is anything but super pumped about gas prices. We got to talk about some fees that they're going to be adding on to their service. It might feel like spring outside, Nicole. It does feel beautiful out here in Houston. But it's still winter for tech stocks because they continue to get crushed. It's not looking good for them. We're going to talk about that. Finally, Uncle Sam is looking into NFTs, but not in a good way. And my favorite story probably of the day, AMC goes for gold in Nevada. We're going to talk about that, explain that near the end of the show. So stay tuned. Delano, you excited for this?
Zaid and Nicole, I am so excited for today. We have so much to talk about. I'm ready to go at you when we talk about AMC, but we're going to get to that later. But for all of you that are listening, we are so happy that you're joining and watching us. Make sure that you do a couple things for you. You like and subscribe, and also hit the notification button so you know every time we're going live, because of course we got those hot takes and we got those cold facts. We're going to get into it right now.
Let's talk about the NASDAQ, which has officially hit bear market territory for the first time since the pandemic began in 2020. Big tech like Apple, Microsoft, Amazon, Google parent Alphabet, and Meta have all sank, marking the 107th bear market since 1990. Now, a bear market is measured as a decline of 20% or more from a 52-week high. The Russia-Ukraine war is the latest risk to hit markets following inflation and upcoming rise in interest rates that have largely hit these high-growth names. I gotta throw it over to Delano to share some of those cold facts about what is going on.
Yeah, Nicole, I have some single name securities and the cold facts of how they performed from the start of the year. Let's look at some of the smaller names like ARK, right? ARKK, down 45% since the beginning of the year. We have Peloton, which is a sexy name. They're down 40% since the beginning of the year. Roku, another sexy name, down 56%. And of course, you mentioned big tech, Apple, down 16%. So that's just showing you like what's been going on in the market. You mentioned some of the headwinds. We have rising interest rates, we have inflation, we have an overseas conflict that hasn't gone down, and there's so many things that are hurting tech stocks right now. But if you look at the outlook, there are some things that could be potentially positive for investors. You mentioned that we're in the 7th bear market since 1990. What has happened to all the prior bear markets besides this one? Of the other 6, 4 of the times that we've had those bear markets, 4 times, we've had the stocks go up higher than their highs, past their highs, 4 out of 6 times a year later. So a couple things long-term investors can potentially do is 1, make sure you look at your investment horizon and understand how long and why you're investing. 2, it could be beneficial to be diversified right now, Zayn. I think that could be one thing that people could be looking into. Like how do you take this market and what people should be doing in this time, Zayn?
Well, unfortunately, this is like cold reality for anyone that started investing 18 to 24 months ago. If you downloaded your eToro app 18 to 24 months ago, you're probably only expecting stock markets to go up because that's all what you've seen. And we've been on the market's been on one of the biggest heaters that it's ever been on, right? It's been crazy. I mean, there's been companies that have been valued at $30-40 billion that didn't have any revenue or barely had a product. I'm looking at Nikola Motors to just name a few, just taking shots here. And I think the market is finally kind of catching up to that, kind of cooling off. Obviously, we've had fears of inflation. The Fed's going to be raising interest. Now we have the Russia-Ukraine war. There's now, just as of yesterday, there's been a lockdown in China to one of their biggest cities, which is going to cause further supply chain issues. So there's things that are bearing down the market. But again, the market was on a heater. It was like on a heat check. It was like making 8 threes in a row like Steph Curry. You just can't sustain that level of performance without coming to reality a little bit. And that's what's happening with the markets. And I think that we might be going into a bit of a pain, but what I'm doing right now is using this as an opportunity. Personally, I fell into the trap of buying those sexy stocks that Delano mentioned. Peloton, Roku. I bought all of them. PayPal. I was buying all of those up because I thought they were going to go to the moon. Obviously, my portfolio is taking a beating this quarter. But I'm using this as an opportunity to kind of load up and dollar cost average on companies that I still like long term. So I'm not panic selling. And again, this is not investment advice, but for me personally, I'm using this as an opportunity to dollar cost average.
Yeah, I think another interesting point is longevity. Like if you look at since 1950, taking the S&P index and look at the average annual return over that time frame, it's roughly about 8%. But of course, it's not just straight up and to the right. There are some times over that course of that time period where the market's down considerably or up considerably. So that just gives a little bit of context for investors on what's happening right now. You mentioned Steph Curry. I think it was his 34th birthday. Yesterday. He's had longevity in the NBA, and so for some people, you have to look at it from context and look at longevity in the market and how that plays a part in your portfolio, Nicole.
So basically you're saying that this stock market can't be like Michael Jordan then and just be hot all the time until it decides to retire, basically, right? It's more like the Steph Curry kind of thing.
Exactly.
Am I getting my sports metaphors right, guys? You have to correct me.
Hey, even Jordan had bad games, so it's not like you're never gonna have the market always go up. And again, I think it's just a stark reminder to everybody, especially newer investors, that don't expect the market to always go up, but don't treat a falling stock market as the end of the world. Especially if you're young, this is the time to actually kind of take advantage of the situation, right? It's always so funny, just psychologically how us humans are, right? And I'm guilty of this. When things are going up, I'm like, oh my god, I wish I bought some more when the prices were lower. And then when things start falling, prices start falling, it's like, I'm not touching this because this is probably the end of the world. We have to kind of trade, investing is also psychological. You kind of have to have a plan. And to me, what I always do is just invest consistently, invest in companies that I'm bullish on long term, and try not to freak out too much when prices start falling, even though it still sucks whenever I open up my eToro app and see a bunch of red. It's not good to see, but you kind of have to push back that. Sometimes, in eToro, sorry for saying this, but just delete the app for a little bit. Just delete the app, don't look at it, and come back to it in a couple weeks or months.
Or you could take it as an opportunity, right, for that learning lesson, like Delano was kind of alluding to, diversification, right? I mean, that's something that we should be thinking about in our portfolios all the time, right?
Exactly. Zay mentioned something so important, a plan. I'm not going to tell people what their plan should be, but if you have one, then you have at least a guidepost on what to do when things are super, super good or, super, super bad. So a plan is all you need, folks.
Speaking of a stock that was also very sexy and down 50% from all-time highs, Uber, a stock that I also invest in. I'm just taking L's all over the place. Uber is they are going to be adding surcharges to delivery sorry, I'm goofing up here. Uber is going to be adding fuel surcharge rides and food deliveries on Uber. So they announced because of prices, they're going to be adding 40 cents to 50 cents of a fuel surcharge to their rides and 35 cents to 45 cents to their Uber Eats ride. Lyft is also doing the same thing, so it's not just Uber. Uber and Lyft are both doing it. Now, obviously, high gas prices have been in the news. Everyone's talking about it. Everyone's feeling that pain at the pump. It's just really fun to say pain at the pump, even though it's not good for everybody. It's just, especially gig workers, right? Gig economy workers that have to deliver food, that have to, to do the ride sharing stuff. It's hurting them immensely. So this 45 cents to 55 cents that Uber is adding is going to be there to go directly to the drivers, and that should help them. But the question is this going to hurt Uber or Lyft's business? And if it is, are they going to reverse their course anytime soon once these fees are added on? I'm interested to get y'all's take. Nicole, what do you think?
The bigger story here, I mean, it's not likely to impact Uber's business, right? A couple cent surcharge here and there. People are still going to want rides, at 2 a.m. when they don't want to subway or drive. So I do think that the bigger picture here, though, is thinking about, is this just a response to gas prices, or is this also a response to the economy being open again? More reservations in restaurants and less Uber Eats deliveries? Something to think about, is this a snowball effect? Is this something that, hey, we're taking the Russia-Ukraine situation and gas prices increasing and using it to almost our business advantage to start kind of that implementing a new business strategy of, oh, hey, we're going to surcharge for this. What's the next surcharge? What's the next thing they're going to do? Is Uber feeling a little pressure right now because things are different? That's the question I'd pose.
That is an incredibly good question, Nicole. But I have the short answer for both of you. No way. Nicole, you're going to be mad at me because I have a Starbucks right up the block. What did I do? I ordered a small coffee for myself. I Uber Eats it, and a venti for my girlfriend, and they brought it over. It was so convenient. I had my feet kicked up. I was getting ready for our top day. So that's why this is not going to affect their business, because of the convenience of this all. We're in a convenient world. We're getting out of winter. I was using Uber Eats way more than I need to. But from the standpoint of how it helps the drivers and people that are delivering, I think this is a great thing to implement. One, because we need people out there doing the driving, doing the delivery, because that is going to also help stabilize the price, right? If you have less of that, then you're going to have increased prices when you have less people delivering or driving. So I think this doesn't hurt Uber. They mentioned they may take it away in 2 months. I don't know if they're actually going to do that. Once you implement that, it's hard to take that away, but we're going to still pay it anyway. So continue doing what you got to do, Uber.
I think you brought up a good point, Delano. I think they had to do this, right? Uber had to do this. There's a lot of stories that I read over the last couple weeks of how Uber drivers were struggling, right? It wasn't profitable for them to drive Ubers anymore because they're pretty much, giving up all their money at the gas pump. So Uber pretty much had to do this to keep their drivers, because if they have a shortage of drivers, prices are going to continue to get shot up, and that's going to affect people taking rides, because if the price gets too high, people aren't going to take rides. So I think Uber really had to do this. It was probably a good solution to just kind of implement a 45, 55 cents surcharge spread across on all rides to kind of soften the blow a little bit. So I think this was smart. Now they're saying 2 months. I think if the gas prices stabilize, which we've seen this even today, gas prices are now starting to come back down a little bit. A barrel of oil is now below $100 for the first time in like 2 weeks. So if gas prices stabilize, I think they probably will get rid of it, because if they want to be competitive with Lyft, like if Lyft gets rid of it, then Uber's going to get rid of it. If Uber gets rid of it, then Lyft's going to get rid of it. So that competition is ultimately going to drive these people to remove those fees. But I think this was a move that they had to do. And you're right, like it's not going to impact their business, especially Uber Eats. 45 extra cents. I'm already spending $45 to get a Chinese takeout. I'm not going to blink at another 45 cents when it comes to getting my food delivered. So I don't think this is going to impact their business at all.
All right, well, not only am I going to maybe retire before both of you because I make my coffee at home and I cook food, I do personally avoid delivery because of that extra charge. And it is easier and healthier to cook or just walk down the street. Zayda lives in Houston, so it's a little different, but Delano, we live in New York City. So anyways, I promote that healthy lifestyle of actually walking and picking up your food, but
Nicole, it's in my budget, all right? It's in my monthly budget. It's
there you
in
go.
there, all right?
Okay.
It's penciled in, so we're not going outside of our budget. Speaking of which, I hope everyone has planned for tax day in their budgeting, because guess what? We're nearing tax day. April 15th is our tax day, and experts are starting to give guidance on what you crypto and NFT. Yes, NFT are likely going to be considered collective, which will carry around a 28% top federal tax rate on long-term gains, according to a lot of tax crypto experts. And by comparison, your appreciation on your Bitcoin and Ethereum will roughly hit you about 23.8% at the top rate. So guys, the question is, are investors actually thinking about their crypto gains, their NFT gains, and paying tax on them? Nicole, I don't know. A lot of us younger people, we have to start thinking about it if you've been trading. Do you think our network is thinking about this?
Hard to say. I think that you're going to see some people in the audience that are maybe like myself and have their dad still helping them out with their taxes, which, hi Dad, thank you so much. To be fair, my dad is a licensed financial professional, so, but I also think there's folks on the side that are thinking about, oh my gosh, like what does this mean for me? But at the end of the day, this is a problem that definitely needs to get resolved quickly. I feel optimistic because I know that there are fintech companies and technology advancements out there that are working to bring the tax complexities, education, and tools into the hands of more retail investors. So I'm hopeful here. I think that NFT creators are maybe getting tired of the extra charges. they get simply because their goods are digital versus maybe another creator that or artist that puts something out on Etsy. So I think we'll see some resolution here soon, but please be thinking about this because it is definitely something that we all need to be paying attention to.
Guys, I'm willing to bet that 95% of people that have bought or traded NFTs last year or whenever in their entire life were not thinking about taxes. Okay, there's just the tax code is already complicated enough. You think that like people are gonna take that extra step of like, oh, well, how are my NFT purchases going to be impacting my taxes? No one is caring about this stuff. All right, everyone's just trying to like get their hands on NFTs and crypto because they think they're going to make money or they're interested in the project. No one's thinking about Uncle Sam, and unfortunately, it might come to bite them in the butt during tax season right now because there's no escaping the tax man. All right, now I'm just going to say this hot take. I think that people that were buying NFTs and crypto are probably just going to try to slide this under the rug. Because again, I've been reading stats about how IRS is already slammed with tax returns and slammed with just processing all these taxes. I'm not sure if they're going to care so much about someone who bought an NFT of an invisible friend for like I don't know, 1 ETH. I just don't know that's gonna get on their radar. No, the IRS people, if you're watching this right now, which I know you are, I've already figured my taxes stuff out, guys. My taxes is straight. I will be reporting my crypto on there, so you can check all that stuff. My accountant is aware of this stuff. I'll make sure I cover all my bases because I don't want to get audited because of this show. So my stuff is covered. But I'm pretty sure for 95% of people, right, that are just dabbling in crypto, that bought some Doge or that bought some Shiba or whatever, and maybe that might have made a couple $100 or a couple $1,000, probably aren't super worried about paying the taxes. Because again, we also don't have like that infrastructure that like we have from our traditional financial institutions, right? Your financial broker is probably sending you multiple emails every other week, like, oh, here's your this form, here's your that form, here's your tax form. Your accountant is asking you for these informations, or your tax software is asking you for these informations. We're not really getting bombarded with that paperwork from crypto companies and crypto exchanges. So because of that, I feel like a lot of crypto and NFT taxes are not going to be reported. And again, I don't know if the IRS really cares about the small time players. They probably are more worried about going after the whales, the people that probably made 7-8 figures. Those guys probably want to get their taxes straight. But if you probably, I feel like if you made like, I don't know, less than 6 figures, you're probably okay. Not investment advice. Please don't please don't sue me here. But that's just my take here.
I will say that like there are places that are starting to. They're called like crypto tax specialists that people are starting to turn to, especially to handle this infrastructure. Because you mentioned, Zaid, it's not totally figured out, right? Like the infrastructure around how you tax these things. So there are people that are turning to these crypto tax specialists that will, one, just help them navigate that ambiguity and how to go around that and lean on the side of being conservative. Because you mentioned there's no escaping paying those taxes, correct? Like, right, Nicole? Like, there's just no escaping it. There's no escaping it.
Yeah, I mean, to Zaid's point, I think it does have a lot to do with just the culture of cryptocurrency and NFTs. Like, when I'm at a bar and my friend gets really jazzed and is like, hey, let's invest in Bitcoin or whatever, let's trade it, buy, whatever, right? Like, super pumped. That a part of that hype conversation isn't exactly, oh, what is this gonna do to my taxes later? So that I totally get. I think there's something to.
You don't talk about taxes when you go to the bar. You're not
no,
going to the
but
right bars.
I'm still talking about crypto for some reason. Like I'm all of a sudden going to bars and talking to my friends about finance. So I'm just saying. So like if it would be, I mean, look, taxes aren't fun. They're not sexy. We all know that. That's why my dad does mine. So like. I get it, but like imagine if we got to the place where like we were talking about taxes in the same way we got hyped about trading and buying cryptocurrency. Maybe we'd all be a little bit better off. I'm just saying, more educational talk, right? I'd love that. Someone teach me. Help! I stopped bothering my dad.
I still feel like just taxes in general when it comes to trading, not just crypto and NFTs, but even like stocks. How many people were thinking about their tax implications when they were investing in meme stocks last year? I say very, very, very few. All right, so maybe some people that made a bag last year when it came to those stocks and options and stuff, they're probably going to get hit with the tax bill because again, there's no escaping that at all. That's if you don't have that figured out, then you need to download some paperwork. That stuff isn't that hard. But those people are probably going to be hit with a tax bill this tax season that they weren't expecting. But again, with cryptos and NFTs, it's way different because there's just no infrastructure. So we'll see. I think a lot of people are going to wake up to that reality this season, and hopefully by next year we have better better rules and regulations from the IRS, maybe better infrastructure, which I'm sure we will. So that way it's not like a game of like, oh my God, am I going to get caught by the IRS?
Yeah, there's a huge opportunity, right, for like a fintech company, someone, an innovator, to come in and bring this this solution to the table for retail investors. So, and I think that they are out there and they're working on it. So I know a couple startups. But anyway, speaking of meme stocks and me just getting excited to get hyped on all that coffee he's been drinking today, AMC Theaters is a 2% stake in gold and silver mining company Highcroft for $27.9 million in cash. So, Zaid, I'm throwing it right to you for the hot takes. Let's go. Let's rumble.
I don't even know how to react to this news, right? The CEO of AMC, Adam Aron, is doing a masterclass in just trying to get people's attention, all right? This dude was starved of the attention because AMC hasn't been in the headlines for, what, 6 months now. Their stock has been in the dumps recently, and he wants to get everyone's attention. So he does this ridiculous move of spending $28 million, $27 million in cash, of the company's cash, to buy a mining company in Nevada? What is he doing?
Wait, you think he did this for attention? Literally just attention. You think that he's so hyped up on his meme stock situation a year ago, and he's like, oh my gosh, I need attention. I mean, it's possible. It's totally
First of all, attention can go to people's heads. It can go to people's heads, all right? As someone who loves attention, I can understand why. Like, this guy wants attention. It can be intoxicating. Now, the part that really, like, I started reading the press release on AMC's website. You should read the press release. The CEO, Adam Aron, even said in that press release that, oh, Spider-Man No Way Home had a really, really good run at the theaters. So because of that, we're going to use this money to diversify the business. And I'm like, okay, there's better ways than spending $28 million to buy a gold and silver mining company. How about maybe make your seats better? How about maybe, I don't know, reclining seats everywhere? Maybe add a bowling alley to your movie theaters. Do something that's going to improve your business instead of getting bogged down and investing in a gold mining company. I mean, that seems very, very sus to me. And I don't know what's going on, but to me, this guy just wanted to make a splash because it's not very newsworthy that AMC is going to be making investments into their movie theater by, I don't know, making it more modern or making it an entertainment hub. It's way more interesting and way more attention grabbing. And we're talking about it right now that this guy just spent 28 million bucks of the company's money to invest into a mining company, which is pre-revenue. The mining company doesn't make that much money. So I don't get it. It just seems like a headline grab to me.
Zay, this is a great business strategy move. What did Adam Aron do? He saw an undervalued, underappreciated asset. And what did he do? He put money towards that asset, right? So we're talking about different things with the inflation, the value of the dollar. What do? You go back to your safe havens. You go back to gold. You go back to commodities.
Right.
That is what he did.
He should have called his financial advisor. He should have called Nicole's dad and been like, yo, buy me some gold and silver. Not using the company's money as a way of diversifying the company. The company is a movie company. Unless he's trying to turn AMC into Berkshire Hathaway that Warren Buffett did, but turning a windmill company into like what it is today. Unless he's trying to do that, which, I mean, I doubt it. I just don't see what he was doing here besides making just a splashy headline. So I just don't get it. I mean, it's like if Tim Cook comes out tomorrow and is like, I'm buying ExxonMobil. It's like, what? What do you, that would make no sense at all.
All these big companies are putting money to work, cash to work on the balance sheet into different strategic areas. This one, yes, it's outside of their strategy. But what Adam Aron mentioned is that we saw an undervalued asset and we thought we should buy it. We have business expertise. Maybe we don't have specific expertise in this industry, but what they did is couple themselves with another investor that actually buys in this space. And now they're like the second largest shareholder of this company. So I thought it was super interesting. I'm riding with the Diamond Heads and the Apes on this one. I think it was a smart move, and time will tell on that.
Look, this investment might pay off just because of gold prices going up and whatnot. Fine. I just still don't. It doesn't make any sense. Like I said, the analogy I go back to is if Apple was like, I'm buying ExxonMobil, it just wouldn't, or investing 22% in ExxonMobil. It just doesn't make any sense for a movie theater company to do this. So to me, it was red flag emojis all across the board as soon as I saw this headline. And when I read the press release, it was even more red flag emojis of like, oh, we made great money from Spider-Man No Way Home. Instead of improving our movie theaters, we're going to buy gold and silver mining companies. So I don't really get it. And I wonder if, I just wonder, like, I wonder what the end game is here with this guy. And I wonder if, like, he's going to do something else crazy to kind of get back in the headlines once this passes.
But did it make you want to go to the movies? Like, did it make you want to go to...
No. Just because AMC owns a share of a gold company does not make you want to go to the movies. If AMC was like, yeah, we're going to, like, improve our entertainment options at the movie theaters, maybe have better food, maybe have, more entertainment, bowling, arcade, whatever, sure, then that'd make you want to go to the movies. But this does not make you want to go to the movies. I mean, honestly, I think what this guy's going to do next is he's going to make another splash move and saying, like, oh, we just bought $28 million worth of Bitcoin or some other cryptocurrency, which honestly probably would have been a better move. Then he probably would have gotten more press. And maybe he's holding that card to play, maybe in the next couple months when he's going to just spend another 8 figures on buying crypto or something.
I feel like AMC is like my cat right now, just trying to get into the frame. Just trying to get into
just trying to get attention. Exactly.
Just trying to get attention. But all right. I mean, we'll see. I'm curious about this one. I mean, diversifying the business is a good move in some capacity, but to Zaid's point, I definitely would prefer for my heated and reclining seats to like actually work.
Diversify your business if your core business is core and competent. If Apple did some diversification, sure, Apple makes $100 billion a year and their business is perfectly fine. If Google's business is perfectly fine. If your core business is failing and you're behind the curve when it comes to like the future of entertainment and watching movies, then maybe focus on your business instead of diversifying your business. That's my thing here. Unless you want the company to go belly up anyways and you're ready to get out of the movie theater business and you're willing to hard pivot, I understand that. But figure out your business first and then go buy and make crazy bets like Google or Apple might do.
Amazing. All right, well, we're gonna see how that pans out. Coming up next, we are going into our Now Next Never section where we talk about some other stories that are worth paying attention to. Zaid, what is happening now? Let's use up the rest of that energy of yours.
Yeah, March Madness. Let's go. It starts tonight. March Madness is one of my favorite sports, the next 3 weeks are some of my favorite sports moments of the year. I mean, 68 colleges, all trying to win the national championship. I don't ever watch college basketball, but I watch it for March Madness. Getting the brackets ready, and this is a business story, right? The business part of this is that March Madness generates over $1 billion in revenue of ads. I mean, all the ads for March Madness for this year have been sold out. 20 plus million people watch the final. This is a big deal. And over the last couple, March Madness got canceled in 2020 because of COVID. Last year it was a little bit less fun because they were in a bubble. Now we're back to normal this year. It's going to be huge. I love watching the drama, and also the one part that I forgot to mention is that the betting companies. I mean, betting is legal in a lot more places this year than it was last year. So I can imagine betting companies are going to make a lot of money or are going to take advantage of this situation. I mean, one of the things that a lot of my boys used to want to do back in the day was like try to fly to Vegas for March Madness and kind of like spend a weekend there during the opening weekends of the tournament, kind of to do some gambling and have a good time and watch the game. So now with gambling legal in a lot of states in the country, this might just be like an at-home experience now where people can kind of participate in gambling and having fun and watching the games at home.
So excited. Yeah, I haven't filled out my brackets yet. I'm about to hit you up. So I don't know who's winning. I don't know who's doing well this year, but I do want to fill that out.
Dude, yeah, I have no idea who's going to win either, but that's the fun part, right? Just like doing like these side bets. Like, okay, yeah, I'm just going to, pencil in like a random 13 seed college basketball team from like rural Nevada or something and just like hope that they make a run. I don't know. It's so much fun to watch.
It is. Let's do next. So next I thought was an interesting story. So Yuga Labs, the creator of Bored Ape Yacht Club, announced that they acquired CryptoPunks and Meebits from Larva Labs. CryptoPunks is one of the oldest and most valuable brands in the NFT space. And Meebits quickly joined that list when they debuted not too long ago. So I thought this was super interesting seeing the creators of projects in the NFT space purchasing another project in the NFT space. Like, what does that mean for the holders of the project that is being acquired? So if you remember, Bored Ape Yacht Clubs, the Yuga Labs actually takes a percentage of all the resales. But when you're talking about CryptoPunks, that is not in the contract for what's happening in CryptoPunks. So how does this change the landscape? Are we going to see more of these projects being bought out by the creators and these platforms? Are venture funds going to raise some funds and some funds to actually purchase some other NFT projects. I think it's super interesting to be watching this space, and it's coming up next.
We're gonna have hedge funds and private equities just going after NFT projects. That's awesome.
Board Apes, I can't wait to see it. I mean, at this point, who knows what can happen? Anything can happen at this point. Like Pete Davidson heading to space. That for me is a never, at least with him trending again. He is heading to space with the Blue Origin flight. So yeah, the reason this is a never for me is really just because I like to think about, other billionaires out there like Mackenzie Scott, who have announced at least $8.5 billion in donations to causes spanning higher education, racial justice, climate change, and so much more. So I love seeing trending topics like that, where folks are putting their money to so much good use. Look, space is really cool. I can only imagine it's wonderful. I guess I don't know why Pete Davidson is going, why maybe if he was chosen or if he's paying or whatever it is. But anyways, just more trends on things that are a little bit more aspirational. But I guess people aspire to go to space. Anyways.
Pete Davidson is the ultimate networker, man. This guy's circles run deep. Now he's gonna be hanging out with Bezos in space. I mean, we all know his dating history. I mean, this guy needs to do a master class on how to network for just ordinary people. Because I mean, shout out to him, man. Shout out to Pete.
Shout out to Mackenzie Scott. I think it's super cool, as you mentioned, Nicole, all the initiatives she's taken to really give away a big portion of her wealth. I think it's incredible.
Facts.
Yeah. Straight facts. Amazing. Well, that does it for our show today, guys. Thank you so much to everyone for tuning in. Thank you for my cat for showing up. And yeah, I'm excited to see you all tomorrow. Be sure to like, comment, subscribe, hit that notification button. We'll be coming live tomorrow again. So see you then. Have an awesome Tuesday.
Peace.
Bye.